Hana and my fellow friends. My name is Norashki Metamaliki. My group will be presenting about Nestle and three resources analysis. Let's move about Nestle.
Assalamualaikum warahmatullahi wabarakatuh, and a very good day to everyone. My name is Marissa binti Afandi, and today I am going to introduce to you Nestle company. So, why about Nestle? So, Nestle Malaysia Berhad is a food and beverage company that based in Malaysia. So, it begins its operation in 1912 and is located at Petaling Jaya, Selangor. So, Nestle Malaysia is among the Bursa Malaysia Index, and it was listed in 1989 as a Nestle Berhad. Sendirian Berhad. Okay, the company portfolio consists of brands which are popular across generations. For example, Milo, Maggi, Nescafe, KitKat, and Nestle Infant Nutrition. Nestle Malaysia through efficient supply chain and is having a world-class manufacturing plants at strategic position in Selangor, Negeri Sembilan, and many other places.
The current issue in company Nestle, number one is share price decline. As of October 2024, Nestle Malaysia share price fell below the 100 mark for the first time in over 6 years, following 10 consecutive days of decline, resulting in a market capitalization loss of 2.36 billion in article The Edge Malaysia. Next, consumer behavior shift. In July 2024, reports indicate that due to high inflation, Malaysian consumers were opting for more affordable alternatives to Nestle products, impacting the company's sales. In article Free Malaysia Today.
Assalamualaikum, I'm Masria. So I want to present about ratio analysis for Nestle. We are going to discuss the financial analysis based on the key financial ratios for 5 years, starting from 2019 to 2023. This analysis encompasses financial leverage ratios, profitability, liquidity, efficiency, and market value ratios. Okay, financial leverage ratios. Total debt ratios. Debt ratio, it reflects the firm's dependence on debt in relation to its assets. It has likely increased from 75.61% in 2019 to 81.09% in 2023. Debt equity ratio, it has increased significantly from 310.05% in 2019 to 428.86% in 2023, reflecting higher dependence on debt as compared to equity. Long-term debt ratio generally stable by increase from 14.92% in 2019 to 21.19% in 2023. Times interest earned reduced from 22.428 in 2019 to 15.478 in 2023 due to the poor level of covering interest expenses. Okay, for profitability, gross profit margin, GPM, the gross profit margin decreased from 37.58% in 2019 to 31.64% in 2023, indicating that there was a drop in efficiency related to maintaining low costs. NPM decreased from 12.19% to 9.36% during the same period. ROA also decreased from 24.68% in 2019 to 18.49% in 2023, which reflects lower profitability of the assets. Okay, for liquidity, current ratio remain low but show an upward trend from 0.648 in 2019 to 0.611 in 2023, reflecting scarce current asset against current liabilities. For quick ratio decreased from 0.315 in 2019 to 0.222 in 2023, indicating reduced ability to pay short-term liabilities without liquidation in inventory. For cash ratio, maintained at an extremely low level at between 0.004 and 0.006 during the entire period. For efficiency, inventory turnover decreased from 6.242 in 2019 to 5.797 in 2023, which shows a slowing down in the management of inventories. Receivable turnover increased from 10.86 in 2019 to 15.23 in 2023, reflecting improved efficiency in collecting receivable. Fixed asset turnover stable and closed the period at 3.115 in 2023. Total asset turnover also remained relatively stable and closed the period at 1.975 in 2020. Market, for the last one is market value ratios. EPS has also been erratic over the years, increasing to 281 cents in 2023 from 287 cents in 2019. So for this analysis highlights the trend of financial performance and areas of concern over the 5 years.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Fazliza binti Mat Iwan. I will explain about the ratio comparison. Okay, what is ratio analysis? Ratio analysis is a tool that measures financial performance through the relationship between different financial indicators and a comparison of the financial performance of Nestle and 3A using key ratio. Okay, we look at the liquidity ratios first. Okay, liquidity ratios has current ratios and quick ratios and cash. Okay, we look at the current ratio represent the ability of the company to meet its short-term debt. So we can see here at on 2019, Nestle has a 0.65 and to 0.771 between 2019 to 2022. This can be analyzed as Nestle has a weak liquidity relative to that of 3A, and we can see here quick ratio. This excludes stock in inventory, shows liquidity focus on liquid assets, and Nestle has a drop from 0.31 in 2019 to 0.22 in 2023. Meanwhile 3A is higher at 5.67, and the conclusion can be seen as a 3A is far more liquid. Okay, so we go for next is efficiency ratio. For the efficiency ratios is for the first one is inventory turnover, the ratio that shows how well inventory is managed. Nestle has ranged from 4.13 in 2022 to 6.24 in 2019. 3A has slightly better at 6.30 in 2023. And next is receivable turnover. This ratio depicts efficiency in collecting its receivable, and we can see here Nestle has a high of 15.21 in 2021. Meanwhile, 3A much lower at 4.65. This can be concluded as Nestle managed its receivable better. And the total assets turnover, assets utilization efficiency in generating revenues, Nestle has stable at 1.9, and meanwhile 3A has lower at 1.19. This can be concluded as Nestle utilized its asset better. Okay, we go to financial leverage ratio. Debt to equity ratio, degree of reliance of debt financing. Nestle increased to 467.45% in 2022. Meanwhile, 3A much lower at 12.22%. This can be analyzed as a 3A is less leveraged and safer. And we go to time interest earned, TIE, the ability to cover interest expenses. Nestle from 22.43 in 2019 to 15.48 in 2023. Meanwhile, 3A very high at 131.80, which indicates high financial stability. Okay, next is profitability ratio. Gross profit margin, GPM, profitability from core operation. Nestle from 37.58% in 2019 to 3164% in 2023. Meanwhile, 3A at 16.53%. Net profit margin, NPM, overall profitability, Nestle drops to 9.36% in 2023. Meanwhile, 3A lower at 7.48%. Return on asset, ROA, efficiency of using asset to generate profits. Nestle gradual decline to 18.49% in 2023. Meanwhile, 3A has considerably lower at 8.93%. This can be concluded as Nestle is more profitable despite declining trends. And market value ratio. Earning per share, indicator of profitability per share. Nestle from 287 cents in 2019 to 281 cents in 2023. Meanwhile, 3A considerably low at 9.2 cents. Conclusion is the Nestle give better returns to shareholders. And the conclusion can be seen as a 3A is on top of Nestle in liquidity and financial leverage, and Nestle is ahead in all efficiency, profitability, and market value ratio. That's all. Thank you.
I will conduct about vertical analysis common size in company Nestle from 2019 until 2023. This vertical analysis help to understand changes in common size finance statement. Let's see. Revenue has show consistent 100%. This is baseline metric. Next, can see gross profit has show lower from 2019, show 37.58% until 2023 has show 31.64%. Next, can see, let's see, operating profit has show lower from 2019, show 16.53%, and 2023 has shown 13.32%. Next, let's see profit before tax, 15.7%, and has shown lower at 2023. Show the percent is 12.47%. Next, profit for the year has show lower from 2019, show 12.19%, and show the percent at 2023 is 9.36%. The data visualization for liquidity ratios chart. This bar chart illustrates the liquidity ratios including the current ratio, quick ratio, and cash ratio from 2019 until 2023. We can see that the current ratio has remained relatively stable. However, around 0.59 to 0.62, indicating comment on the company ability to meet short-term obligation. The quick ratio and cash ratio, on the other hand, remain lower, which reflects for profitability ratios chart. This line chart represent the profitability ratios, which include the gross profit margin, net profit margin, and return on assets. Over the same period, the gross profit margin shows a slight decrease from 36.32% in 2019 to 35.63% in 2023, while the net profit margin declined more from 12.19% to 9.36%. This suggests highlight any factors like cost control issues or revenue challenges. Meanwhile, the return on assets shows steady downward trend. Next, the chart illustrates the financial leverage ratios from 2019 until 2023. We can observe key metrics such as the total debt ratio, debt equity ratio, and time interest earned. Over the years, there has been a notable trend. The second chart displays efficiency ratios, including inventory turnover, receivable turnover, fixed asset turnover, and total asset turnover from 2019 until 2023. Highlight notable trends such as improvement. Lastly, data visualization, earning per share. This chart represents the from 2019 until 2023, the steady increase from 287 cents in 2019 until 281 cents in 2023 demonstrates financial stability. This is a positive indicator of the company performance over the years. The conclusion is common size financial statement analysis reveals that Nestle demonstrates strong performance with total revenue accounting for 100% based on ratio analysis and financial comparison data. Nestle shows a superior financial profile. Therefore, we choose Nestle over 3A Resources as a preferred investment option. Investing in Nestle is worthwhile. Thank you.